Ted, good morning. How are you? Bob, Phil, Fred, John, Ted, storm. Yes, looks like storm in a lot of the regions, including Chicago and New York. All right, so I think we're ready to start. All right, everybody's ready. I'm ready, Scott. Good morning, Bob, Ian. Victor, Mark. All right, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options. This is my brief bio. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, again, very important to go over main concepts of trading psychology. One is the dichotomy of control. The idea is that in trading, there's process and there are outcomes, right? In the beginning, when we start trading, the most important is outcome, right, at any cost. As you progress through your journey as a trader, you realize that process is extremely important. Trading plan, written down the rules, have an Excel spreadsheet where you write down all your trades and you go through positive and negative visualization and you write down your target gain and stop losses, right? And then you grade yourself. A and B if you follow the process, C and D if you do not follow the process, right? Based on the outcome. So the idea is that you only have control over your own thoughts and action. You really don't have any control of what other people do or think, right? And especially when it comes to high pressure jobs or where you have to where there's a lot of uncertainty, right? Doctors and lawyers and traders, right? It's the same idea. So you have soft landing, no landing narrative on one hand, hard landing on the other hand, based on different data points. More people jump from one camp to another. We saw that yesterday, right? Good data from manufacturing and services, data better than expected, and then yields rising and market sells off, right? So sometimes these price actions don't make sense if you just look at them as one piece of information, not in the context of all the news. So for that reason, I propose to concentrate on your own process and your own trading plan. Some suggestions are cash, right? I would propose 30% of your portfolio in cash if you're in soft landing or no landing, right? Take some of your cash and start deploying it to buy equities. If you think we're in hard landing, maybe sell into the rallies, right? Because most likely market very close to the top, right, for this year, very close to the top. Portfolio drawdown, right? No matter if you're in soft landing or in hard landing, I propose to only have 4 positions, 2.5% of account value per position. Right? A lot of people ask me questions, why did you choose that? My own experience based on the surveys, based on the questions, based on the tickets that I have seen in the past, now over 10 years. The concept of portfolio drawdown, right? If you're down 10%, 4 times 2.5 of your account value, then you can regroup, right? You can figure out, if you were in soft landing, then you will start thinking, why is market selling off? Do I want to change my position? If you're in hard landing and the market rally 10%, same thing. You can think, figure out whether you want to change the camps or, so you can have that healthy dialogue if your portfolio is down 10%. Once your portfolio down 20 or more percent, you don't have that luxury of waiting or thinking, right? You kind of usually just capitulate or, stop trading or taking a pause. So the idea is to avoid that situation, avoiding, have a drawdown of more than 10%. What do you do with the rest of your position, right? If you're a stock trader, 4 position, 2.5%, if you, especially volatile stocks, you probably will have, 50 to 70% of your equity into equities, right? If you're trading stocks. If you're trading options, especially single calls, single puts, or spreads, then yes, you can have a situation where 90% or 80% of your portfolio is in cash, which is okay, right? Because your portfolio can, move more than by 10%. The rest of the cash right now, money market fund pays you 4-5%, right? So you can just keep it in money market fund and you get to your 5%, and that's very almost zero risk, guaranteed by federal government. So that's very important. The most important is journaling, grading yourself, being self-aware, and not risking more than 2.5% account value per position. I would split position into 2 trades, meaning that you don't risk more than 1% per trade. You trade in stock, you trade in options, futures on futures, or options on futures on options, whatever the most exotic instrument you will find in the market. The rules are the same, right? Do not risk more than 1% of account value per trade. If you can get that right, no matter how many times you trade, you never risk more than 1%. You never lose more than 1% of account value, right? $10,000 would be $100. I think everything else will fall in place. But that is a very difficult task, right? It takes time, it takes practice, it takes discipline. In terms of support resistance levels, let's look at stock forecast toolbox. For today. So market sees that, again, vector turning slightly more negative. It sees 398 as support, 406 overhead resistance. Next 10 days, basically saying, you know what? It was a pretty big sell-off. Yesterday, model sees 400 as support. It was a bigger than expected pullback yesterday. So now it sees 390 as a support. I agree with the model. I think short-term market is extremely oversold, right? We just dropped almost 5%, right? I was looking at these measurement moves. In December, we pulled back roughly 8%. Right now, we're down roughly almost 5%, 4 or 5%. So I think another 3% is reasonable, right? Similar measurement, which would take us to 390 level. Right now we're facing downward trend. We're facing 50-day moving average, 200-day moving average. They're all very close to each other. So I don't think bulls will give up their position that easily, right? But on the other hand, there's really no spike in volatility or any of the fear measurements, put-call ratios. It's a little jump, 23, not a lot, right? So I think market is vulnerable for short-term rebound, right? I would say something along those lines where we rebound off of the support. We're slightly higher, right? rebound, and maybe a little lower, a rebound, and maybe the retrace half of right now. What used to be support is overhead resistance. So rebound here, and then we have another down test either this week or next week, right? Because we're already trading below 400, so that opens up the door to 50% retracement from the August high to the pandemic low. 50%, yes, 50% retracement. I don't think anything fundamentally has changed, right? Everybody knew that, you know, inflation is going to stay here longer. Everybody knew that Fed has been saying longer, higher, longer for, you know, a long period of time, but market has ignored it, right? And now market decided to listen to it, right? So it's kind of, you don't have a control when people listen. It's again, it's the same thing. It's the idea of, you know, it takes multiple touch points, right? Why do people buy something, right? From marketing perspective, you have to touch it 7 times, right? The idea is you listen 7 times, you internalize information. 1, 2, 3 times, you know, you don't listen, right? You know, I was referencing story from Old Testament, right? The Egyptian Pharaoh, you know, listening to Moses, you know, it took him 7 times to change his opinion. Markets are the same thing. Is, you know, sometimes it takes 7 times to say in the higher for longer, and then people, okay, fine, then we're gonna listen, right? So that's the same idea. But nothing has changed, right? I still think soft landing is a dominant theme, and yesterday, you know, kind of feeds into that narrative, right? And even though people are listening to the Fed now, maybe a little bit more, but there's no signs of recession, right? So until we see signs of earnings recession, I don't think market is going to pull back and retest the lows. So, you know, and we're approaching, from seasonality point of view, we're still approaching March and April. And usually March and April, you do have strong market. Maybe not vertical move up, but, you know, at least you know, retesting the highs, right? Retesting 420, maybe even 430. So I still think it's not off the table. Market just opened slightly higher, spider slightly higher. I mean, flat, you know, a little bit higher, a little bit lower. It's all about yield, right? Everybody's watching, you know, earnings don't matter, you know, it's all about yield and dollar. 2-year yield is retesting 52-week high. 10-year yield slightly broke through the December high, slightly above that level. So we'll see if there's a follow through. And then dollar continues to be strong, right? And we talked about that. So it's all about predicting yield and currency, right? And then markets will follow. All right, these are some of the earnings today. So the companies already announced earnings. Baidu, better than expected earnings, right? So feeds into China reopening theme, up 5%. Coinbase fluctuating between gains and losses. Caesar fluctuating between gains and losses, now slightly higher. TJX slightly lower. Overstock down 8%. So if you did these earnings, you know, now is the time to try to close them. We did TJX yesterday during closing bell. So now I want to kind of close it. So let me close the trade. So far hasn't been moving. So TJX is, last time I checked, slightly down. All right, so let's try to close the put. Hasn't started trading yet. Try to close it for 4 cents. And close the call. For 2 cents. All right, so that's TJX. Right, iron counter again. I think market is going to trade sideways for the next couple of months. Right, best case scenario, just trade sideways. slightly higher, slightly lower. So iron condor butterflies, cover calls would be the strategy. So I'm trying to close the TJX. And again, my thought process, I've been saying that for the past few weeks, I think there will be pullback. Now we have this pullback, so close March bearish positions. Not enough time. I mean, obviously I could be wrong. And, we could start the sell-off now where we are, break through the 390, 380 level. I mean, it is possible, but I just don't know based on what data that would happen. So from that perspective, I think sell-off is a little bit overdone. So my goal is to close bearish position. So I close March bearish position. June, September, I'm still in a hard landing camp. I haven't changed my opinion. But March, there's not enough time, right? There's not enough time. So I started buying spiders. I still think March and April will be bullish. So I closed QQQ, short QQQ, right? I thought the market is going to pull back more first quarter. It didn't. So I still had that leftovers of the QQQ, short QQQ. So I converted short QQQ into long spiders, right? Reflecting short-term bullish bias. What else did I do yesterday? I did close the February put spread, right? Bigger pullback than I anticipated. And I added to TLT, right? Added to TLT and trimmed NOC, right? So those are the trades from today and yesterday. Any questions? Black Zero, welcome. Let me know if you have any questions. Ian, good morning. Faust, good morning. Welcome back. It takes 70 times to learn. Okay. Me, 7 times. 7 times. Usually if I hear something 7 times, it registers. All right. Alibaba earnings tomorrow. Overput for this week. Thoughts? Mark, Sir Vlad. Welcome back, Mark. Alibaba earnings, I mean, I assume they're going to be similar to Baidu. So I don't know about buying put. I'm planning to do iron condor on Alibaba, right? Baidu is up 5%. I mean, it's not identical business, but it's all feeds into reopening and, check. So, I mean, it did pull back significantly. I mean, I'm not sure why it's not trading in sympathy to the Baidu, but again, the problem was buying puts or calls, right? There is implied volatility, right? So market participants, right, going back to game theory, already anticipate certain move, right? Alibaba, I think it's like, I'll have to count, but roughly probably 7 to 10%. So the move has to be higher, greater for you to make money, right? So you have to have an outlier. You have to catch an outlier, right? My thought process is always different. Instead of catching an outlier, which happens 1 out of 10 times, I'd rather sell iron condors, right? Sell the fact that it will probably not be a move. So if you have a strong opinion that Alibaba is going to miss the mark for whatever reason, because this is kind of a staple of Chinese economy. But if you have a strong opinion, maybe because CEO is quit or whatever, then yeah, you can buy a put. I would maybe suggest at least a put spread because puts are very expensive. So buy a debit put spread. At least you kind of lowering your cost basis. Maybe a lot of people do calendar spreads, right? They would sell, let's say Alibaba estimated move is probably 10%. So I would say 85, right? So you might sell, I don't know, 80 put that expires, this Friday, and then people buy calendar spreads, maybe 3 weeks out, 4 weeks out, maybe go into March and buy March put. So you buy a March put and you sell front months, right? So you do a calendar spread with the idea that there will be a move to the downside, right? You're going to lose money if the stock move goes higher, but you're going to lose less because you're selling that front months put that there's a skew, right? Most of the time there's a skew where They're almost trading at the same level. But the short put, the idea will expire worthless because it's not going to have an exaggerated move. But then you still have that bearish put that expires in March, so something along those lines, right? So let's assume it's 10%, right? So then, you sell put, right, weekly, right, and you buy put monthly, right, or weekly but longer dated. So you have that calendar spread, and at least this short put will offset some of the cost of the long put, right? So that's very popular strategy. I've seen that over and over again. Not my cup of tea, because I don't think there is usually an outsized move. Plus, this put is not going to move a lot, right? You really have to have a continuation, right? Down, 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 right? So if you think market is, this is it, this is as good as it gets into China market, right? Pretty big rally, and it's just going to continue sell up, then yes, this would be the right strategy if this is your outlook. Scott, thank you. Mark, thank you. No questions, +0, thank you. No questions, +0, all right. Meanwhile, let's see. Coinbase up, Caesar up, Baidu. So Baidu is pulling back. It was up 7%, it's only up 3%. TGX is 0, overstock 19. All right, let me look at my earnings. So if you did some of the, yesterday I went over, I said, these are the 5 ideas for iron condors, right? So if you did any of this, then this is the time to start trimming. All right, so Caesar, we talked about Caesar. Okay. Clem C, welcome to the broadcast on Discord. All right. Meanwhile, let's see. Any big rebounds? Not really. So not really. I think everybody is watching for. Nobody wants to have very large position going into the FOMC meeting minutes. I mean, usually kind of it's not an event, but last time it was an event, right? So it did spark volatility because everybody read it where, none of the committee members think that they will lower interest rate this year, right? And that was a surprise, right? The expectation was that Fed will pivot towards the end of the year. Everybody read the meeting minutes and said, no, we're not lowering interest rates. And that caused us pullback because market was overbought. It could be the same thing, right? Market is oversold or vulnerable for further pullback, right? Everybody's on the edge right now. So, certain, language, phrases, how many times, certain word occurs, people can, rationalize any way they want to. So do expect 2 p.m. Eastern, 1 p.m. Central that there could be sparking volatility, right? And we have Fed speak also, right? I mean, that's later on. I assume, I'm not going to say anything new. higher for longer, right? Higher for longer. Let's see, anything else is of interest. So far, not a big rebound. QQQ is up 0.5%. Semis are up 80 basis points, so a little bit oversold bounce. Everybody's fighting for 400 level, right? Everybody's fighting for 400 level. Let's see if bulls can push it a little bit higher. I mean, immediately, right, the breakdown is 405, right? 405, maybe 404. Model basically calls for 406. Okay, so 404, 406, I would consider selling if you're a short-term aggressive trader, right? I mean, best case scenario, we try to close the gap, right? Here, right? So this is all sell. If we do drop below this value, right, this is also a sell, right? I mean, if you're an aggressive short-term trader, you can say, okay, I have little risk to the downside, right? I'm going to get out if the market drops below yesterday's low, but try to squeeze potentially 1%, right? Potentially squeeze 1% or maybe 0.5%, but that would be the setup. All right. So sell here, sell if it drops below here, right? I think the next level would be 390, right? This is I would be a buyer, right? So here, this is the 50-day moving average, 200-day moving average down, downtrend, I would be a buyer here, right? If we drop below here decisively, then most likely we're going to be testing 390, all right? Retesting 390. All right. Why do iron counters usually take longer to fill? Market makers, right? I mean, I tried to find liquid names. It was the tight bid and ask spread, like TJX, but again, only 1 million shares. I mean, 5 million shares, 10-day average volume, but 1.5. It's not a super liquid name, right? It's not as liquid, let's say, as Baidu. Baidu has, I mean, actually, not as liquid. Let's say, I don't know what's the liquid. Coinbase, right? Coinbase, everybody's trading Coinbase, right? So Coinbase is 21 million. So Coinbase will be easier to get filled on iron counter. TJX, a little bit less. So I'm trying to go over Coinbase. So Coinbase fluctuating between losses and gains, right? I mean, they did deliver pretty bad earnings, right? 75% volume down, trading volume. Obviously, nobody's trading coin. I mean, Bitcoin, the volume is down. But on the other hand, they said the worst is over, right? That this is the bottom, and kind of soft landing narrative, right? That Bitcoin is rallying, it's going to continue to rally. People are going to start trading it, so it's up 8%. All right, Baidu actually pulled back and lost most of its. So TJX, you can close for 4 cents to the put. Let me change that. So TJX, did I get filled? Okay, close the call. Let me close the put. $0.05. Or is it already filled? Oh, it's already filled. Okay, so I'm out of the TJX spread. Market is going to remain volatile. So especially this week, I would not try to hold it till the end of the week because the sell-off can accelerate at any point, right? I don't think we're down. I mean, yes, it's oversold, but there could be a kind of wave B and C. Right? We always talked about that pullbacks happen in waves, right? So you have a strong A rebound, B, C, probably D and E are missing, right? Let's make an assumption that this is D and we're gonna, but then you have wave E, right? So I still think wave E is missing. A, B, C, D, E. Question. Okay. AA can speak for the stock. Scott, again, my opinion, you cannot predict the outcome of the earnings, right? Today is a perfect example, right? Coinbase, right? I mean, this is kind of a darling of the market, right? Of previous bull market. Everybody was buying Coinbase. Now everybody's selling Coinbase. It was down, I think, at least 2 to 4% pre-market. Now it's up 8%. You just can't predict which way the market is going to move, right? So, I don't see a lot of people taking directional bets, right? Buying puts or calls, right? That's not a popular strategy. Popular strategy was earnings, either calendar spreads or iron condors. That is the popular because you bet in that 9 out of 10 times, Alibaba is not going to move outside of the range. So that's my take. Thank you. Scott, NOC looks like it found the bottom, right? So it looks like it continues to rally, right? 3 weeks in a row, higher highs, higher lows. I think this is short-term the bottom. The concern is obviously, Chinese Prime Minister Xi is going to Moscow. On one hand, everybody's afraid that he's going to give weapons to Russia to fight in the Russian-Ukraine war. That would be escalation. I don't think that's going to happen. The other theory, he's going there to force Russia into a peace agreement, right? That it's been a year, long enough. It's a stalemate. Innocent people are dying. It's affecting economy. He's going to put pressure. So, if there's de-escalation where Putin says, yes, I agree with you, Mr. Xi, I'm going to, surrender, then NOC is going to sell off, right? But if they're going to give weapons to Russia, well, then NOC is going to rally. So something to keep in mind. But right now, it looks like it is breaking above reactionary earnings high, right? And usually there is a follow-through. Maybe not in a straight line, right? I don't think it's in a straight line, but something along those lines does make sense, right? So I think it'll be similar price pattern. Pullback and then rally, assuming there's no fundamental change in the Russia-Ukraine conflict, war, right? Unfortunate war. Only 9 days to questions are out of time, so it's any different to close the position. I mean, Ian, my opinion, right? If you have a, let's say, call option in LVS, there's 9 days left. I think they announced earnings, right? If I'm not mistaken. Right, they already announced earnings. And let's say, it obviously had a good reaction to earnings, pull back, right? And you think there is a follow-through, right? I mean, you do have a kind of well-defined stop level, like I would this low, right? I mean, I would get out of this trade if it does break this, but as long as it stays above, there is a good chance that it will go higher. But it takes time. So if your call is underwater, I would do a call spread. Try to do a call spread, right? Because the problem with calls, well, VIX is still low, but VIX, if I'm right, and let's say in March we do have a rebound, then VIX will drop back to 18, 19 level. So I would still consider doing a call spread and give yourself a little bit more time. Maybe instead of 9 days till expiration, give yourself till maybe April, by April spread. So give yourself more time, because right now it's going to be a grinding, right? It's going to be a slow grind, right? And I don't know what the catalyst is, right? Earnings season is over. LVS already announced earnings. I don't know, Wynn Resort probably also announced earnings, right? Let's see, Wynn Resort. Wynn Resort also announced earnings, but they pulled back, right? Because China is pulled back, and because dollar rallied, right? So it's a theme, right? And I think the theme is that we do have a pullback, potentially going into end of February, right? Another week of this up and down, up and down. We do reach 390, kind of worst case scenario, and then we rally back up, right? Kind of a slow grind back up, going into the next earnings season, right? So that's the core scenario, and then LVS should follow, right? LVS basically gonna follow spiders, right? Or FXI. So Ian, let me know if you have any question. Ian, my idea, if your opinion has changed, right? You had a certain idea about LVS, right? If it didn't work out, you can close and move on to the next trade. If you still think that, I don't know why you originally got into this trade, right? But assuming you were bullish and your opinion hasn't changed, you're just off on time, right? I'm very often wrong on time, right? I thought sell-off is going to be, by March, we're already going to retest the lows. That was my core scenario. I'm pretty wrong in terms of timing, but that doesn't mean I'm wrong in direction, right? So okay, so I'm wrong March, I'm closing March puts and I'm rolling them into June or September, because I think June, September, I'll be correct in my, opinion. Same thing with LVS, it's just different time frame. You might be wrong for this week, but you might be right for the next 4 weeks. So usually you want to give yourself a little bit more time. All right, thank you. Let's see how the earnings are doing. Coinbase up 6%. Baidu actually turned flat. So Sequent, perfect idea. Baidu, hit a home run. I don't think there was anything wrong with their earnings. They were up 7-8%, and now they're flat. I mean, can somebody predict that? Like, I definitely cannot. If you can, then that's great. That's awesome. Let me know what the formula is. But this is kind of a classic reaction to the earnings, right? You have a rally, then everybody's digesting the news, and people say, well, maybe it's up. I don't even know how much up. 100% up. Maybe it's a little bit exhaustive, right? And it's reaching a lot of overhead resistance. Some people think, no, we're in soft landing, and Baidu is down, a lot more, right? So there's a continuation, and it's going to change, right? So it's kind of a reaction, right? It has nothing to do with the earnings. It's repositioning. People are repositioning for the next quarter. All right, Overstock down 5%. TJX, Coinbase, Caesar. Okay, any questions so far? Let me look at my positions. See if I want to adjust anything. Baidu, stubbornly expensive call. Okay. Fine. Caesar. Okay. Meanwhile, I would keep an eye on, let's see, home builders are up 1%, so that's good. IWM start participating, up 0.5%. QQQ spiders are slightly higher, but we do have larger move, not large, but yield pullback, right? So that's good, right? I would keep an eye on yield pull, 2-year yield pulling back, 10-year yield pulling back. So, I mean, it's a healthy pullback. I would watch this 380, right? If it drops below 380, I mean, right now I would watch 388 on 10-year yield. That's probably most important. If we can drop below 388 and stay below that, then this pullback is probably done. If we bounce off and we make new highs, well, then the pullback will reaccelerate. Ian, thank you. Scott, what makes you change your mind on direction? Direction on the market? My direction on the market has not changed. What my opinion changed on the timing, right? In December, when we had the worst months in December, I thought, VIX has never been high, and I thought there would be signs of recession in Q1, right? That was my theory, and there will be a pullback. So it didn't happen, right? So I'm changing my opinion not on direction of the market, but on the timing of the market. So if it's not in Q1, it will probably happen after the next earnings cycle starts, right? So we're talking about usually May and June are pretty bearish, right? People don't want to keep long positions into summer when there's a lot of uncertainty. Plus, I think we will start, Apple and Microsoft earnings in Q4 are actually much better than they will be in Q1. I think they're going to get worse. So that's my theory. So then I'm just changing my opinion on timing, not on direction. But short term, obviously, bulls are in control, right? Bulls are in control short term. I mean, short term, I'm talking about next couple months. Next couple days, bears are in control. Do you have a time frame for breaking a vertical 3 up or 2 down days? I do. So to confirm the trend change, usually 2 to 3 days, right? So you can see 3 days in a row, pretty big pullback. That probably means that this is either the top for this year or very close, right? So I think 2 to 3 days, that's the top. To reverse, right, to confirm that we are moving up, you probably need another 3 days like this, right? 3 days of higher highs and higher lows to confirm the trend change. So right now, the trend is to the downside, right? So you need at least 2 to 3 positive days to say, okay, now we're talking about where's the bottom, right? If this is the top, where's the bottom, let's say, for the next months or 2 months? We need 3 days of higher highs and higher lows to say where the bottom is. I assume it's going to be something similar to December, right? I mean, to me, this looks very similar. We reached the top. We were building the top for months. Then we had a pretty strong pullback, about 8%. Then we did nothing for a week or two, and then we rallied. I assume something similar, right? Maybe try to close the gap. Maybe, not so good. I don't know what the next is. Unemployment numbers, right? We're heading into March unemployment number, February unemployment numbers. So maybe another uptick in unemployment, right? We drop back, and then bulls and bears are fighting. They're not sure what to do next, and then we rally. Right? And then we pull back and eventually break through this level. Right? I mean, this is a pretty big support. This is pretty big support for the bears. So it's going to take time to break through this. It's going to take time to break through this. It's not going to happen just on one PMI print. You're going to have serious data points pointing to earnings recession. All right, let's review the other position. Black Zero on Discord. Let me know if you guys have any questions. You can type inside of the stream chat. Okay, so the rest of the positions I have IWM. So March, the goal is to close March position. I close QQQ March put spread. The only thing I have is XLF, right, in March. We did have banks finally broke down, right? I still think there's maybe one more wave down, right? Might be one more, right? Maybe we'll get to the 34.5, and that's where I would close short put. I mean, bearish put spread, not short. Bearish. This is a bearish put spread that I have, right? Because just not enough time, and I still think March is going to be positive. So I have. This is the last position I have in March. June I have time, right? Russell 2000. You know, probably if I have to guess, you know, not going to go much further than this, right? This is the top. Right, so I think this is the top, and you know, at this point, we're probably not going to break this. So there is little room to the upside, right? Maybe 12 points to the upside, but obviously there is a lot more room to the downside. So the risk is, you know, the risk is to the downside, not to the upside. I think there is more risk to the downside than the room to the upside. So for that reason, I mean, I'm just going to wait. That's Russell 2000. NOC, we talked about it, right? I'm still bullish on NOC. I did trim the position, right? I'm trading around the position. It looks like it's breaking out. It's above the reactionary data point to the earnings, and I think there's more room to the upside. This is one of the sectors that's not highly correlated to spiders. Actually, I think it is. I think actually it's inversely correlated. I think one of the reasons NFC is up is because spiders is down, right? People either hiding in the certain sectors or they are piling to the risk. So risk on, people sell NFC and move into Bitcoin, or Coinbase. Risk off, you know, they're selling Coinbase and Google and they're buying NFC. So I think that trade still stays. QQQ, April, bullish position. I still think this is not over, right? This rally from beginning of this year, very strong rally. A lot of people got caught by surprise. I don't think it's over. I think there is still a little bit of room to go. And again, not a popular opinion. I think if you're in soft lands and you think this is a great opportunity to go long, right? Because we're gonna make all-time highs this year. Okay, fine. So April bullish, June bearish, right? June bearish, 280 to 90 call spread. I'm bearish. Still have SH position. If you're not comfortable hedging using options, you can hedge by buying SH, right? So you can see I'm buying at different cost basis. Silver. I think this is going to be the year of silver and gold. It's already has a very strong rally. Obviously, it pulled back because of the strong dollar. I think dollar is not done, right? So I think we will have volatility where dollar eventually will break through this above level. So I think dollar will break through this level. Do I think it's going to go here? Not sure. Not sure. So I think silver short term is oversold, right? And I would just slowly try to accumulate, right? I don't think this is the bottom, right? It's a strong support, but this is not the bottom. We probably may or may not revisit these levels. We may or may not revisit these levels. So, I'm buying here with a very small amount. I'm going to buy here and probably buy here, right? Because I think this year and next year, the silver continues. Eventually, it will break through this level. Might take some time, but eventually it will break through this level. So small position in silver, small position in spiders, right? TJX, I'm out. Let's see, is there any premium in these other options? Maybe not. No, okay. Continue to add to TLT, right? I think right now, yes, interest rates are going higher. because everybody thought it was 4.8 terminal rate, now it's 5.2, but nobody thinks it's going to be 6 or 7, right? Because inflation probably will continue to go down. Maybe it will take longer, but the trend is to the downside. If that's the case, then TLT should continue to rally. Obviously, if terminal rate due to inflation becomes 6-7%, well, then TLT going to continue to pull back. But I don't think that's going to be the case, right? Right now, the trend is inflation is down. Maybe it'll take longer to get to 2%, but it's passive least resistances to the downside. And biotech. I do have biotech, long biotech to offset some of my short position. I'm still net bearish overall in portfolio. It did pull back, right? This A, B, C. Maybe there's another D and E. 200-day moving average, I think, will hold, right? So I'm long 80-85 spread, and I think I'm going to remain long. XLF, all bearish. XLF, all bearish. June, I have time, right? These are the puts and calls, right? So bearish call spread, bearish put spread. But March, I need to close, right? And banks, if I have to guess, probably very close to the top. It's either the top or very close to the top. And test of this resistance is kind of, maybe revisit the top, but eventually continue to go lower. All right. Any other questions? We have a lot of people. It's good. Thank you. Bearish on financials. Okay, John, agree. Ian, copper is the only thing I'm confident. I mean, copper, again, if you're in soft landing, obviously copper going higher, right? China is reopening, infrastructure build, everybody's building, life is good, copper goes higher. If you're in hard landing, copper is going lower. So it just depends on your camp. Most of these stocks, it just depends, on your view on the market till the end of this year, right? If you're in bear camp, hard landing, then you sell into these rails. You'll be a seller of copper. If you're in soft landing camp, you will be a buyer in camp, right? You can be in hard landing and think copper is going to go higher. Like a lot of people say that. To me, that doesn't make sense. How can you think that we're going to be in recession and global recession and everything is going to be down, but copper is going to go higher, right? China on its own cannot continue going buying, if there's a recession in United States and Europe. So to me, that doesn't make sense. Long term, I mean, beyond this year, yes, copper is an uptrend, right? I think, but can it revisit these levels? I think it can, right? And I think it will, right? I think it will drop to 24, 26, right? So long term, I'm bullish, but I would be cautious, and again, kind of like with the silver, buy in increments, right? Because if you're buying here copper, and copper drops to 26, well, I assume you want to buy more at 26, right? Especially if we think that we're going to reach recession sometime this year. Then after this year, the market is going to rally. All right, it's 9:11. Let's see, spiders actually rolling over as we speak. Yeah, spiders are rolling over. Something happened in the market. So this pullback is probably going to accelerate. We'll see where we're going to close. I mean, we do have Fed meetings, so I wouldn't be too optimistic. Let's see, rates back up. Spiders drop, but let's say rates. Oh, because rates are rallying. Okay. Okay, that makes sense. I mean, all eyes on this FOMC meeting. I'm not sure if something happened. Something. Let me look at my Twitter handle. See, usually it's a good place to find something like happened. I assume this is just continuation of the pullback. Ballard says his projections has reached 5.37, so a little bit higher than people. Maybe Ballard's comment. Not sure. I don't know at which point he's right now. Let's see financials. And he spoke like an hour ago, so that's probably not it. Not sure. I think more of it just a technical. So QQQ slightly lower, Spider slightly lower, making new lows, right? Continue to make new lows. So I would watch, this trend line, right? That's kind of the next support. 398, what do we say? 398. So model actually doesn't see more pressure below 398, but we'll see. All right, any other question? They rebound. Right, the next, if we don't hold this level, they're all kind of staggered, right? This is we're making new lows. We'll see where we're going to close after the Fed meetings, but next level would be 50-day moving average, 396. That's kind of where we are now. After the 200-day moving average, 393, and then you have 50% retracement, 390. So I think then day one we're below 400, day two we're below 400. If tomorrow we are below 400, then most likely next level of support is 390, which in theory should hold because December was the worst month in history. And we dropped to 380, so in theory 390. This is where we should stop. But pendulum swings both ways, to the upside and to the downside. So we just have to keep an eye on data. FOMC, we have GDP. I don't think there'll be much surprise in Q4. FOMC, and then Friday PCE, right, which should be in theory, within the expectation after CPI and PPI data. So I'm not sure which of these data points can cause more volatility, but we'll just have to wait and see. All right, 9:16. All right, guys, you've been awesome. Thank you very much. Today is Wednesday. Scott will do the closing bell, and I will see you tomorrow morning. Thank you very much, and have a great day. Thank you for participating. We had a lot of people today. It makes me very happy. Thank you for joining. YouTube. Please don't forget on YouTube, we do have live session. We just broadcasted live session. Thank you on YouTube watching. We haven't more and more people joining. So please, if you like the content, click on subscribe. If you like these videos, closing bell, strategy roundtable, brief. Every day there's a video uploaded about my view on the market, direction, trends, interest rates, dollar. So if you find this information useful for you to trade, please click on like and share on social media. Thank you very much and have a great day.